All right, good morning to you. Good morning, YouTube family. It's been over a year, I guess, since I did a video on this channel. I've been quite busy and I sincerely apologize for this. You know, outside trading, we all have a life. We all have something else that keeps us busy or something else that engages us. And besides, for many of us, trading is simply just something to do on the side. And whilst for others, it's a full-time job. For me, it's a full-time job, but I have other full-time stuffs I do on the side. So I sincerely apologize for just showing up here today. I hope my apologies would be taken. From now henceforth, I'm going to do my best to make sure I drop more videos here, try to educate us more, try to also do more weekly analysis for you all to see. So today, I just want to prep you guys with something very, very simple, but mostly misused and misunderstood. It's something that most of you know, but you use it the wrong way, or you stress yourself too much in order to use this correctly. The truth about trading is trading itself is too complex. Forget those that tell you trading is simple. Trading is not simple. Trading is complex. So in order for you to be profitable and to find peace, you just have to make things easy for yourself. But when you're going the easy route, it doesn't mean that you want to just do it anyhow. Even the easy route you would be going through should have a logical process that backs it up. But it should be so easy that in 5 to 10 minutes, you already know the decision you want to make on the chart. You don't want to be on the chart for 1 hour analyzing just to be able to know what to do. One thing that will do for you is, let's say you analyze, you use all the complex method in this life. You use it to analyze and you end up taking a loss. One thing I can tell you for sure, if you ask anyone that is, maybe ask a neurosurgeon or you ask a psychologist, they will tell you one way or the other that thing registers in your brain. And those are the things that compound to creating some bad psychology in your head or in your mind that ends up making you unprofitable and keeping you in a circus. So what am I saying in essence? You want to make things very easy for yourself. So what do I want to teach today? I want to teach you support and resistance. Support and resistance. I know it's something you've heard about, it's something you know. In fact, it's one of the basic things you would have been taught even when you took your preliminary training when you were getting into trading, whilst you're getting trading, or even when you got to pick baby pips, you would have been taught support and resistance. It's a very simple subject, it's a very simple logic, nothing complex about it, but it can be misused. Or let me say there are better ways to use it to get much more better and faster results. Good. So having said this, let's quickly brush through what is a support, what is a resistance. So take for example, let's say that whilst we were younger, when you were younger, you went to an eatery. They still do it now. You went to an eatery, and you know, on this festive period, especially that one that has to do with children, you would see them bringing. There's this big toy. I don't know the name. It has some sort of foam, and it looks like a wrestling ring. Yeah, it has foam, so whereby when the children jump on it, it bounces them up. Yeah, so now let's now imagine that we have some sort of that wrestling ring that has a padded foam, and one is also at the top that makes the place kind of locked up, maybe something like this. Okay, let me use my lighter instead. So we have maybe something like this. You have this, then you have one here, then we have the what guards the whole place like this. So the children will enter and they jump up like this, jump down, then the thing bounces them up. Naturally, the thing will bounce them up because it's a foam. So when they get to the one at the top also, what does it do? Because it's a foam also, it takes them down. Then they get here again, it pushes them up. They get here again, it pushes them down. Here, like the circus continues until there is a break out of either of the two sides. Do you get it? So this idea or whatever happened in this place is a limitation process whereby the person is limited from going down the same way is limited from going up. Again, he tried, is limited from going down, like breaking below, neither is he allowed to break above. So he's experiencing some sort of limitation which causes congestion. In Nigeria, if we relate this, if we want to bring this into our transportational mechanism or transportational aspect of life, we would say we call this like traffic or hold up. When there is no movement of cars, everything is just stuck on one point. So that is the same thing here. You cannot go up, you cannot go down. Okay, let me say price cannot go up, price cannot come down. Price cannot go up repeatedly like that, which means they are stuck in some sort of congestion. So this support and resistance, most times when it is above and below, when we have situations like this, situations like what I just drew here, this is what we now call consolidation, which I'm sure you know. This is what we call consolidation or a ranging market. So this is what causes a consolidation or a ranging market till price now eventually breaks out to whichever side it wants to go. Even this on its own is a strategy. You can be a consolidation or ranging trader where you just trade consolidations and range. I know people that trade that way. They are not interested in trends. They just want to look out for a pair that is consolidating or ranging. Then they begin to trade and scalp in between. And whilst some people, they are waiting for the breakaway out of this range, just like what happened here. Just like what happened here. They are looking for the breakaway out of this range, such that the moment they see that it breaks away to the downside, they are looking for a good opportunity to buy, to take out the upper side, which is what the ICT or SMC people call AMD. I don't trade ICT, I don't trade SMC, but this is what they call AMD, that is accumulation. It was manipulated to the downside, and then there was a distribution. So this is how your resistance and support cause consolidation, range, or maybe accumulation. So this tells us that, your support is simply a limitation floor whereby every time you tap on it, it pushes you to the top. And your resistance is what? Is a limitation ceiling. I'm bringing it into something that you can relate with. It's a limitation ceiling whereby each time you jump up, there's no way you can break through the roof or the ceiling. It will push you down every time you get there. So that is your support and your resistance. So what are the rules that back your support and resistance? I'm not going to make anything complex for you. I'm just going to make it as simple as the rule states. The rule says for your support or your resistance to be valid, it must have rejected price twice or thrice. It must have rejected price 2 times or 3 times. And of course, we have 2 types of support and resistance. Let me mention that. Types of support and resistance. S and R. This is not the common thing everyone is trading. I'm not talking about the Malaysian approach. No. This is the types of normal support and resistance. We have the traditional, then we have the dynamic one. We have the dynamic one. So most time, the traditional one is what I'm teaching today. The dynamic one is available everywhere. Maybe we'll deal with this someday. This dynamic one is majorly trend line. For those that trade trend line, the dynamic S and R is mostly what? Your trend line. This is mostly your trend line. For those that trade trend line, this is a dynamic. And why is it dynamic? Because it is moving. It's not static. It's dealing with a moving flow. So that is why it's called dynamic. There's another dynamic one, which I won't be teaching. It's not going to be covered in the scope of this class. But what I want to deal with today is traditional support and resistance. So the traditional support and resistance is whereby price needs to reject at least twice to validate that that place is historic and it has good confluence. So number one, let's say we have price do something like this. We have price giving us a series of bullish move. Then sometime in the future, price came here and pushed down like this. Then price came again and pushed down like this. A lot of people would say that, oh, I'm teaching you the right way now. This is what you are taught on YouTube, that, oh, when you say this first touch and second touch, this is a resistance. And a lot of times it is mostly said that, oh, when you see the two touches like this, you should expect the third one to come and then a push away, which is not bad. But many a times they'll tell you that after this third time, when you see price coming again the fourth time, this resistance is already weak and there are chances that price will blow it out. But I've seen scenarios, which I know you must have seen also, where price will come, it won't blow this place out, and it will still deliver. So what is the cause? The cause is very simple. This first and second touch that is being qualified as first and second touch here is not a first and second touch. This is not a first and second touch. Because this is simply one single touch. Why did I say so? When price give us a bullish structure that tapped into this place and rejected, this rejection did not deliver any move. It didn't deliver any major move. It delivered only an internal move. It only came to retest. This is only simply a retest, not a mitigation. This is simply a retest. So these two like this are simply classified as one touch. As one touch. These two is simply classified as one touch. This is touch 1. We only had double retest of touch 1. Are you with me? So the second time price came now, this is the second one that now validates this our resistance. So which means we are now expecting it to come the third time. So you would not be confused when you see price come and they are counting it as the fourth time, thinking it will blast through, but you will be so confident because this is simply a third touch and you get your confirmation to sell down. I hope this is clear enough. The same thing applies to what? If I invert my chart now, the same thing applies to support. You just have to turn it around. This is the logic behind validating your support and resistance. Now, the next thing I want to clear. When they tell you, oh, you need to go and check past data, past history, go and check your support or resistance in the past. No, when we are dealing with price, you really don't need past data to be able to know what to do currently. Because majority of traders now are day traders. You are not a position trader, neither, in fact, even as a swing trader, you don't need so much in the past to go and look at what is happening in 1980 or in 2010 or in 2005 to be able to know what you want to do today. No, you just need recent data, most recent data. Your support and resistance is everywhere. All you need to know how to do is to be able to decipher which is which. Because when you get to your chart, you see a lot of people clutter their chart with a lot of support and resistance. So you just need to know how to pick which is which. So let's come to the chart. So this is a CAD CHF 2-hour time frame chart. What can you see? We can see that price keeps going up like this. High, low, high, low, high. Then we have this low that could not create a new high. Then we have a low and we have something forming. So if you are asked to pick maybe a support or a resistance or something that I don't even like to separate them, I just call them S and R. If you are asked to pick an S and R, what are you looking out for? I'm looking out for major areas where we had good structural rejections. Not like I'm looking for structure like mitigational resistance or support, not just a retest. So, and how to know that? You want to identify what is my trend. And even on these 2 hours, what can we see? We can see the trend is very bearish. The trend is very bearish, right? So now what can you see? Price did this: low, high, low, high, low. Then we have this high. So if let's say I want to capitalize on the trade that happened here, for example. Let's say this is the trade I want to capitalize on. I want to take this trade. So what do? I need to reference most recent areas. I don't need to be going into the past to go and be looking out for when it is lying right before me. So what can I see? And mind you, another mistake is it doesn't have to be perfect every time. I can see price rejecting this area multiple times, which is a lot of retest happened here. That is one. I can see here again, something happened. is still around the same region. Are you with me? Then I can see it happen here again, still around the same region. So this tells me that something is happening in that area that needs to be checked. So what do? I simply pick my rectangle tool and I stretch it. Majority of the time, if you want to draw something accurate, just switch to your line chart many times. Just switch your line chart. Your line chart, just make sure that you have good touches on each of the areas you're trying to mark. So just extend it. And I usually just convert it to a zone. An SNR. I'll just convert it. So nobody knows where I'm drawing from. You might be picking your own in the past. And if we trace my own even to the past, you will see that it has some history. But I don't need to be going into the past. So what happened here? What happened here? Price came, tapped into my zone. What would I have been looking for? Either you're looking for candle formation pattern or whatever, or you're looking for a structural behavior. Whichever one you're looking for, you would have probably gotten your confirmation. If you are the type that is looking for candle formation, maybe you would have gotten in somewhere here. You'd have gotten in somewhere here, for example, and your stop loss reasonably above or wherever you want to put it. Then let's even say you're targeting the low here because you know this is a bearish market. Okay. So, and if you are the structure person, you'd have probably gotten in somewhere also, and you would be in this trade. Of course, you might have even taken out your trade here, or you would still be waiting for it to come back to TP. So that is a better way to look out for your support and your resistance. That is a better way to look out for your support and resistance. Instead of going into past data that you don't need, you can do well with the recent data also. So let's do something now. So let's say I'm believing that this buy is going to probably continue, and I want to see if there's a backup for this buy. All I need to look out for is my recent data. And by recent data, I don't mean the current move. Something that has happened maybe yesterday or previously, not extremely far. So all I need to do is just look for areas that gave me clean and good structure legs. Pair them together and do what? Trace. So what can I see? I can see that this area gave me some sort of higher low. It moved a bit. Are you with me? This one was going to, it did a retest. It did a retest because this is an internal move. It did a retest. Then when we come extensively to the future, you can see this gave me a structural move. You must be able to identify your structure very well. So what am I saying? Even though they are all internals, you can see it. This one was the lower low that broke this higher low. So that's a structural point, a valid one. So it gave me a structural point, and it makes it 2. So if I should extend into the future, like if I should pair both of them together now, can you see it? I have a good resistance or support zone. So if I was to look out for candle confirmation in this place, or maybe I'm the higher and lower time frame entry person, I would have probably gotten a trade somewhere, somehow, maybe in this place, and I'll keep my stop loss here or somewhere below or wherever. And what happened? I'll be taking my TP here. I'm in profit just because I didn't have to go into the past, but simply applying support and resistance in the right and logical way. I won't be going further than this. I hope this explains some things to you and passes the information to you. If you have any questions about this support and resistance series I just taught, please feel free. Type it in the comment box. I'm going to answer your questions, or you reach out to me on Instagram at Wave Depth Academy. Write me your questions and I'm definitely going to answer you. Also, it would be nice if you make comments on the next video you would like me to explain or teach on. And I would look at the majority of votes, then I would make a video on it. Please don't forget to give me a thumbs up on this video. Don't forget to also make your comments. Don't forget to give me your corrections. I would be glad to be corrected. Don't forget to subscribe. Please subscribe. Please, I beg you, subscribe. We want to grow this channel. We want to grow this community. Please help us to subscribe. Then don't forget to share with your family, your friends, your trading partner, or anyone you know at all that you know this video will do good for. And finally, turn on the notification button so you'll be aware when we drop the next video. Thank you, and do have a splendid day and